Wall Street traders speak a completely foreign language every single day. They talk about dead cats bouncing off concrete floors. They trade cables under oceans and chase mythical unicorns across charts. In fact, almost 80% of daily trading terminology uses weird slang. Learning this trader shorthand gives you a massive advantage in financial markets. It allows you to decipher financial news and spot hidden institutional moves. Let us decode the entire dictionary of stock market jargon together. We will start with the vast zoo of animal trading terms. Bulls represent buyers driving stock prices aggressively higher over time. The name comes from a bull thrusting its horns upward into the air. Bears represent sellers dragging asset prices down into prolonged market declines. They swipe their sharp claws downward when attacking market valuations. Wolves of Wall Street refer to aggressive traders who manipulate markets mercilessly. The original term predates famous movies by nearly 1 full century. Black Swan events describe catastrophic market crashes nobody ever saw coming. The dot-com crash and the 2008 financial collapse were classic black swans. A dead cat bounce happens when a collapsing stock briefly bounces upward. Even a dead cat will bounce if dropped from a high enough building. Retail traders often buy these temporary bounces and lose massive amounts of money. What most people do not know is how other animals rule trading desks. Whales are massive institutional investors who move markets with giant orders. When a whale places an order, price charts instantly jump or crash. Hawks and doves describe central bank officials managing global interest rate policies. Hawks aggressively raise interest rates to fight off rising inflation pressures. Doves lower interest rates to stimulate economic growth and boost employment numbers. Unicorns are privately held startup companies valued over $1 billion. Tigers refer to aggressive hedge funds inspired by legendary investor Julian Robertson. Understanding these animal terms helps you spot major institutional market moves early. Now let us look at the intense slang used for market movements. A short squeeze forces short sellers to buy back heavily shorted shares quickly. GameStop jumped over 1,000% during a famous short squeeze in 2021. A long squeeze happens when crashing prices force long holders to panic sell. To the Moon describes an asset price skyrocketing upward at absurd speeds. Cryptocurrency traders and retail stock investors love using this explosive phrase daily. Tanking means a stock price is dropping extremely fast like a heavy rock. Jigged out describes getting stopped out of a trade right before it rallies. You sell at a loss and then watch the market instantly take off. The surprising part comes next when we break down dangerous trading techniques. A pump and dump is an illegal scheme run by unethical market manipulators. Fraudsters inflate stock prices with fake news and hype up retail buyers. Once the price spikes high enough, the fraudsters dump all their shares instantly. Retail traders are left holding worthless assets while the manipulators walk away rich. Fading means intentionally trading completely against the prevailing market momentum or trend. If a stock surges upward sharply, a trader fading, it takes a short position. It is a high-risk strategy reserved strictly for highly experienced market professionals. Squiggly lines is the humorous nickname for technical analysis indicators on trading charts. Indicators like MACD and relative strength index look like random squiggles to beginners. Mastering these squiggly lines helps you spot precise entry and exit trade setups. Before you skip to the end, hit that subscribe button right now. Subscribing ensures you never miss our daily market breakdowns and actionable trading strategies. Joining our growing trading community gives you a huge advantage in dynamic markets. Now, let us explore the colorful world of currency and index asset nicknames. Foreign exchange traders rarely call major currency pairs by their official international codes. They use quirky historic nicknames that speed up fast pit trading floor conversations. Ozzie or Ozzie refers directly to the Australian dollar and US dollar pair. Matey is another popular trader nickname for that exact same Australian dollar pair. Kiwi represents the popular currency pair of the New Zealand dollar and US dollar. The name comes from the kiwi bird stamped on New Zealand legal tender coins. DAX represents the primary stock market benchmark index for 30 major German corporations. Cable is the legendary nickname for the British pound and US dollar currency pair. The term originates from transatlantic telegraph cables laid along the ocean floor in 1866. Traders used underwater telegraph cables to sync currency prices between London and New York. What most people do not know is the pop culture origin of other pairs. Barney refers to the US dollar and Russian ruble currency trading pair. It gets its name from Barney Rubble, the iconic character from the Flintstones show. Betty refers to the Euro and Russian ruble currency pair across institutional desks. Betty Rubble was Barney's wife, making the nickname a natural thematic trading pair. Loonie is the universal nickname for the Canadian dollar and US dollar pair. The single dollar coin in Canada features a native water bird called a loon. Ninja is the energetic nickname for the US dollar and Japanese yen currency pair. Swissy refers to the US dollar and Swiss franc currency trading pair worldwide. Using these exact terms allows you to speak the same language as professional traders. It helps you read institutional market updates without feeling completely lost or confused. Always pair market vocabulary knowledge with strict personal risk management rules and strategies. Never trade real money until you thoroughly understand price action and risk controls. Position sizing and protective stop-loss orders keep your trading account safe every day. Look out for our next video posted daily to stay far ahead of Wall Street.